chosen something.
This meeting is being recorded.
In addition, I believe there are many professionals. There may be many engineers as well and accountants in the audience. So I will present it in a mixed style, not going as deeply as I would do for a university class, and in a way that it reflects what's happening out there in practice with regard to costing and pricing of electricity. Let me now share my presentation. All right, you are seeing my first slide.
Yeah, fine. We can see.
Let me now move. So in this 45 to 50-minute presentation, after which there will be approximately half an hour for Q&A, I will be briefly touching on the structure and the governance of the electricity industry and the progress so far with reforms. I do apologize, I live very close to a road. Costing of electricity supply, how it is done, as well as the legal and operational provisions for costing. Then the structure of the costs, and how do you take costs to prices? How do you convert costs to prices? And what exactly is happening in Sri Lanka with regard to pricing of electricity, more specifically the theory versus practice of pricing electricity as we see in Sri Lanka. And finally, a glimpse into the grid of the future for which the costing and pricing should be ready. As we go through different phases of development of particularly power generation, how we should be prepared for the imminent changes. Of course, all information I present is based on published data and reports. So therefore, some of the information that is published is somewhat dated. I will be extensively using year 2019 data. 2020 data is available, but it's not complete. 2021 data is not published at all, although certain pieces of such information is available with regard to costing and pricing of electricity. But basically, it doesn't matter. What matters is the system and the methodology and the strengths and weaknesses of what we are doing now and how it should be improved. A glimpse into the structure of the electricity industry. These names of ministries keep on changing all the time, so I don't change this diagram once in a few years. So what you see on the left-hand side of the broken line is the Ministry of Power. At the time I did this diagram, it was Ministry of Power, Energy and Business Development. On the right-hand side is the Ministry of Petroleum, which is now called Ministry of Energy, whereas the left-hand side is now called the Ministry of Power. So names don't matter very much, but there are several institutions under the Ministry of Power, state-owned institutions. CEB is the largest, and the left-hand side you have Sri Lanka Sustainable Energy Authority, who is the promoter and the regulator of renewable energy, Lanka Coal Company, the coal supplier, Sri Lanka Atomic Energy Board as well come under the ministry. But what is relevant to our discussion today is the fact that the CEB is disaggregated into different businesses which are licensed separately under the Electricity Act. So there is CEB-owned hydro and thermal power generation, and CEB's transmission, bulk supply and operations division. And 4 of the 5 distributors are owned by CEB. So arguably, CEB is the largest player in the electricity industry in the country. But as you know very well, since 1996, Sri Lanka allowed private investments on power generation. So IPP is the acronym for Independent Power Producers, who are thermal and relatively large by Sri Lanka sizes, whereas SPPs are small power producers, which by definition are less than 10 megawatt, and by definition, all of them are renewable energy-based generators. So private sector is engaged in electricity production with small and large power plants using renewable energy as well as thermal energy. And you see a red box over here, Lanka Electricity Company, who is also a distributor. LECO, as it is known, is indirectly owned by the government through its shares held by the Treasury as well as CEB and the Urban Development Authority. LECO is engaged only in the business of electricity distribution, and LECO serves about 10% of all customers in the country. Moving on, with that structure, Sri Lanka established the new Electricity Act in 2009, which we may even label to be a reform act. Through the act, the Public Utilities Commission, which was in existence for quite a long time by then, was empowered to be the technical, economic, commercial, and safety regulator. Apologize for the spelling mistake. I've underlined economic. So out of the regulatory functions of the Public Utilities Commission, our discussion here today is related only to economic regulation of the electricity industry. And as I said earlier, CB was functionally, but not financially unbundled into one generation entity, one transmission entity, and 4 distribution entities. Sorry about this. Other generation licenses, as I said, both thermal and renewable, number about 270 as of end of 2020, and the number is growing as more and more renewable energy power plants particularly, and the occasional thermal independent power producers coming into the system. Of course, since 2008, Sri Lanka allowed rooftop solar PV, and presently there are about 30,000 customers, may even have reached 40,000 by now, until the statistics are seen for last year, having rooftop solar and supplying electricity to the grid under different pricing mechanisms. Now, the core issue that we are discussing somewhat more detailed today is the implementation of tariff reforms, and my observation, sadly, that the implementation of tariff reforms is incomplete. So what was envisaged in 2009 with a lot of hope has not come into, has not become a reality with regard to costing and pricing of electricity. So in summary, the costing reforms have been implemented to a certain level. So I would say it's partially operational, whereas pricing reforms are in fact not operational. So how electricity was priced before 2009, which was a landmark year to implement reforms, electricity is priced in the same way with only some small changes in the structural layout of the electricity prices. We will get into a little bit more detail as we go on. But what does the law say? The law, of course, says what it should say as follows. The electricity tariffs should be, which means the costs and customer prices, should be determined by the transmission and bulk suppliers and the distributors, as the case may be, in accordance with the following conditions. It's a methodology set by the relevant licensees in accordance with the cost-reflective methodology approved by the Commission. Now that means the Public Utilities Commission, who is the regulator for economic activities in the electricity industry. So this cost-reflective methodology has been established already. And the regulator should permit the relevant licensees, that means CB, LECO, and generators, everybody, to recover all reasonable costs, not all costs, but all reasonable costs incurred in carrying out the activities authorized for the license, under the license. And of course, the prices should be approved by the Commission in accordance with the policy guidelines approved by the government. Of course, there are many variants that have been discussed from time to time. But I wanted to highlight what the law says about subsidies. The law, the writers of the law back in 2007, 8, and 9 have not forgotten that subsidies have to be managed. So, as we know, subsidies have always been a problem with state-owned businesses. And the Act says the following about the subsidies. So it says, notwithstanding any other provision in this Act, so just forget about all the clauses in the Act, the Commission should be satisfied of the adequacy of funds being provided by the Treasury to bear the cost of any subsidy approved by the government to subsidize customers. So what it says is that the government has the right to ask for subsidies to be given to specific identified customers. For example, the hotel industry when they are in difficulties after COVID. But then the Commission should be satisfied that adequate funds are being provided by the Treasury to the electricity suppliers. Or the Commission can also arrange cross subsidies from other customer categories to provide for the subsidy. And the basis of electricity tariffs and charges should consider these subsidies as structured above. So subsidies are also looked after by the law. Now the problem we have in Sri Lanka, because I'm sure you hear very frequently, CB, the electricity board, petroleum, the government petroleum supplier, Sri Lankan Airlines, or they are the three giants who are losing sometimes up to 100 billion rupees a year. And we need to examine whether this is actually a loss or whether this is a difference between a cost and a price, or is it a mix of the two? Is it caused by inefficiencies? And if there are inefficiencies, by how much can we reduce the costs by improving the efficiency? So the system to identify this and calculate this is all in place. It's only that the people who matter are, in my view, too lazy to calculate and say, look, the cost can be reduced by 1 rupee, but unfortunately the difference between the cost and the price is 6 rupees. So therefore the price has to go up by 5 rupees. So jack up the price by 5 rupees and tell CB and LECO you need to reduce your cost by 1 rupee. Okay, with that simple example, let's move further. This situation has prevailed like this since 2016. As I said, one objective of my presentation is to disseminate the methodology for costing and pricing. The fact that it is not accurately practiced is a related matter, but what is more important for the professionals in this country of all description to properly understand what is the method of costing and pricing electricity. But in reality, since about 2016, the sector has not been financially sustainable every year, and the gap between the cost and the price has increased to probably by about 40% of cost by now, by this year. Let's move forward. So I said that I will mostly use 2019 data because that's all published by the Public Utilities Commission as well as the electricity suppliers. So if tariff regulation by PUCSL follows the methodology, what should have happened in 2019? This is my structure of costs. I will describe this a little bit. Let me take a few minutes. Now, the costing methodology is a bit of a lengthy process. The process requires each and every license holder to submit their costs in a particular format. There are templates for that. Once in 5 years for capital related activities, and recurring once in 6 months for operational related activities. Or in summary, transmission and distribution costs to be filed once in 5 years, because these are slow-moving investments. These costs don't change drastically from year to year. Whereas operational costs, particularly the fuel budget, and to a lesser extent, the renewable energy budget, changes rapidly. It could go up 30% plus or minus, depending on the strengths of the rainfall that you get in a 6-monthly window. So these are the figures for 2019. Customers, given the price structure of electricity, should have paid 258,000 million rupees in that year. And the distribution of electricity was done by 5 entities. 4 of them were CEB. Let's call them 1, 2, 3, 4 of CEB. They have no other names. And LECO is identified as the distributor number 5. So depending on the customer mix served by each one of these licensees, you will see that licensee number 2 is the largest, and his income is more than double the income from LECO. So you can imagine he has a large customer base, and therefore he needs more money to operate his distribution network. So therefore, these 5 distributors are different, and they are allowed the costs for their operations. So most of these are fixed costs because it's a distribution business. Whether there are more customers or less customers, more energy sold or less energy sold, these costs have been filed and approved by the PUCSL in that year, 2019. But since the customer structure is different, their incomes are also different. And after keeping the amount of money that is allocated for their distribution operations, these distributors will have to transfer that money to what is known as the bulk supply transactions account. So this is the system that was set up in 2009 and 2010 and was expected to be operational from 2011. So after allocating the money for their operations, they transfer 202 billion to the central account, which gives 12 billion for transmission. So transmission, as determined by the Public Utilities Commission based on their submissions, determined that in 2019 they will need 12.5 billion rupees for their operations. Of course, being largely a manager of a fixed asset, what are the transmission costs? The costs are depreciation, interest payments, operations and maintenance, expenditure in terms of staff, and spare parts. That's about all, because they are operating a fixed asset, and similarly the 5 distributors. But generation is different. Generation has a fixed cost and an equally large or even bigger operations cost. So 281 billion was the total amount of money paid in that year to CEB's own power plants and private power plants, which we call IPPs, operating on oil, and SPPs, the small power producers, who are all renewable energy power plants. So you will see that if you earn 258 billion and spend so much for distribution, and you are left with 202 billion, these are costs that were submitted by the regulator and approved by the regulator. And spend 12 billion on transmission and 281 billion for generation, obviously somebody has to give the subsidy. According to the law, the government should provide the subsidy. Did the government give this subsidy? The answer is no. Did the Public Utilities Commission facilitate this subsidy? The answer is no. Did the single buyer, who is CEB, invoice the government for this subsidy? The answer is no. So therefore, this amount of money in cash adjusted suitably reflects as a loss to the CEB. So when you look at these numbers, of course, several ideas will come to your mind. Can the efficiency of staff deployment, maintenance, etc., be improved so that these distribution costs, which presently add up to about 40 billion rupees. Can they be reduced? So that's a valid question. Can the transmission activity be done more efficiently? Efficient means not only energy efficiency, but efficiency of use of funds, efficiency of deployment of staff, so that this 12 billion can be reduced, and similarly for generation. Before I move further, let me show the same figures in an easily understandable structure, this time shown on a per kilowatt hour basis, because it is easy to understand the smaller numbers. So you and I together paid electricity bills. Of course, as I always say, Sri Lankan customers are very good. And as we know, CB and LECO are very tough in collecting the revenue. 99.5% of Sri Lankan customers do pay their bills. So 1696 is what we paid on the average per kilowatt hour. And you look at the costs of distribution. Now, this is where some kind of comparison can be brought in. LECO cost only 3 rupees 20 cents to distribute a kilowatt hour of electricity. Whereas the adjoining CB region 4 costs 479. Now, I would not say that CB is inefficient, because there could be good reasons for the distribution costs per kilowatt hour to be higher. For example, this particular CB region may have a very low customer density, maybe a large geographical area. Now, what I say is, rather than looking at these numbers and crying about this, we need to benchmark these numbers. We need to benchmark these numbers. So, for example, for distribution, what does it matter? The line lengths matter, distribution network lengths, the number of customers matters, the customer density matters, because you have to service these customers, you have to visit these customers, there are travel costs, etc. So therefore, these numbers have to be benchmarked and then compared. And that's precisely what we are not doing. So the generation cost was 1774, and the government had to provide, should have provided 6 rupees 31 for each kilowatt hour sold in the country. And here I have separated the renewable energy related costs. In 2019, our renewable energy pool has cost 18 rupees and 1 cent per kilowatt hour produced in that year. So let me move on with that information in hand. Now, there is a frequent question as to why LECO is making profits and CEB is making losses. And you see the answer in this diagram. Look at the right-hand side. Look at the right-hand side of this diagram. It talks about LECO. According to the practice in Sri Lanka, all customers in Sri Lanka pay under the same price structure. Same price structure, whether you are a LECO customer or a CB customer, you for a given number of units of electricity, you pay the same amount. So we have what is called a uniform national tariff. Our seniors will know, until LECO was set up in 1984, such areas were managed by municipalities. And the price of electricity across different municipalities was different at that time. But with LECO being set up, there was a policy decision that all customers will pay at the same price structure, irrespective of where they live. But as you know very well, in India, electricity is differently priced in different states, and even within the same state, there could be different distributors charging different prices for electricity. So coming back to our question as to why is LECO making profit, the simple answer is that LECO is financially separate. LECO is financially separate. So therefore, LECO's profit of 5,000, well, not profit, but allowed cost of 5.2 billion is guaranteed. So the LECO's customers, the calculated income from customers is 30 billion, and 5.2 billion as of 2019 was allowed for LECO's costs. And then 24 billion, which is the amount left out, was transferred to CEB because CEB provides power to LECO to distribute. So therefore, out of this 5.2 billion rupees, after allowing for their costs, our methodology specifies that a distributor is allowed to retain 2% annual return on assets. 2% return on assets. So therefore, I would not be able to tell you offhand how much the profit of LECO will be, if you like to call that the profit, because your depreciation is looked after, your interest payments are looked after, maintenance costs, staff, spare parts, everything is looked after within this number. Probably the order of magnitude of the return on assets embedded in this figure could be about 300 to 400 million rupees, that order of magnitude. Whereas the answer to the question as to why CEB is making losses is that when CEB distributors whose allowed costs of 9.3 billion, 10.1 billion, 18 billion, 13 billion are also calculated exactly in the same way that it is calculated for LECO. The only difference is that if you are a CEB customer, when you pay your bill, it goes to the central account. It doesn't go to the distributor's account. If it goes to the distributor's account exactly as LECO does, all the distributors will be reporting profits. Similarly, the transmission licensee, the transmission activity will also be reporting profits. So then who is going to take the loss? The loss has to be retained or loss has to be absorbed by the bulk supply functions of CEB. Not any one of the people who actually manage the network. Not any one of the people who actually generate electricity. The loss has to be parked at the single buyer. So since the financial separation is not there, I think it has been suggested many times, why don't you financially separate at least at the distribution level? I'm not talking about privatization, but financial separation so that there will be a separate identification of your efficiency and your profits. It could be very well that at the end of the year, the profits of these distributors are partially contributed to the bulk supply account, but then the profit will be separately calculated. Similarly for transmission, similarly for generation. So therefore, I believe you got an idea as to why CEB is reporting losses and why CEB is reporting losses and why LECO is reporting profits. So if the government subsidy of 91 billion rupees was not forthcoming, according to the law, the price of electricity should have been increased by 34%. Maybe in one go, or as the procedure allows, in two tranches on 1st of January and 1st of July. But that was not done. So therefore, we keep on hearing that there are losses. So coming back to the procedure that has been set up to establish the costs, later on we'll get on to pricing. To establish the costs, the procedure requires that all licensees, including CEB, to submit their transmission and distribution costs once in 5 years for the future 5 years. So therefore, the costs obviously starts off with a existing asset base and the assets to be added and the assets to be retired, and on an asset register on which the depreciation is allowed according to Sri Lanka accounting standards. Then they have to declare how much of the investments would require to be taken in as loans, and for which the interest payments will be part of the calculation. Then, of course, the maintenance cost, the staff, and other expenses will be provided as a forecast for the next 5 years. So both CEB and LECO did this in 2010 on a trial basis. 2011, an extraordinary filing just to correct the inconsistencies in the filings of 2010. 2013, there was an extraordinary filing, although it was expected in 2015. 2015, the filing was done, and 2020 filing was done, the results of which have never been published by the PUC. And of course, these costs for transmission and distribution are forecasts. It has in it embedded future investments. So if those future investments are not done, PUC actually does an ex post correction. So a transmission line is not built, a distribution network is not built or delayed, the corrections are done to the depreciation provision as well as for the interest provision. Now I said the generation costs are filed once in 6 months. Of course, now I think from this year there is some talk that the filing for generation costs will be annual. So costs of generation, which largely depends on the fuel costs as well as renewable energy purchase prices, are filed once in 6 months for the next 6 months window. Then, according to the established procedure, there has to be a correction for the past 6 month window. So, future 6 month window calculations are done, but the past 6 month window corrections are not done. So, therefore, the generation costs that I can give you or that PUC presents are only forecasts. They are never corrected for the past, which is a shortcoming and it has to be done. So we will move on further. Now, what is the compliance status with regard to customer tariffs? My earlier slide was with regard to costs. Now, customer pricing submissions have been done in 2010, 2011, 2013, and 2015. So out of which 2010, 11, and 13 went through the procedure and resulted in an announcement of customer tariffs. Because the procedure is that the electricity distributors, once they are told that your costs are approved, then the distributors look at their market structure and they have to propose the pricing structure to meet the approved costs. So even the successful customer tariff filings in these years, the full tariff was not granted by PUCSL. No subsidy was provided at all by the government either. So in summary, since Electricity Act of 2009, which expected to resolve all these problems, there has been no perfect customer tariff determination by PUCSL. So CB was always given to manage a loss-making institution by definition. All right. We will move on to briefly discuss the trends over the last window since the Electricity Act became operational in 2010. 2011 to 2013, what happened? I said 2013, there was a tariff determination and an increase in tariffs. And in 2014, the government announced the tariffs, undermining PUC's authority. And PUC followed the government decision with a commission approval. And of course, PUCSL persistently approved the cost far in excess of tariffs. PUC is legally obliged to make customer tariffs to be cost reflective. So that is not happening. So as a result, this slide, it has a load of numbers. I apologize for that. But it summarizes the non-implementation of costing and pricing principles embedded and enshrined in the Electricity Act. So as of end of 2019, there was a cumulative cash deficit of 365 billion in the electricity industry. So you might wonder, how is the sector operation? How does the sector operate with this kind of a massive shortage of cash? Of course, CB has got used to manage this first by not paying for fuel to the Petroleum Corporation. Secondly, not paying the government treasury for the capital and the interest due for borrowings by CEB from the treasury for capital investments. So likewise, by various techniques which should not have been followed, CB is managing, as we hear every now and then. But that's not the way it should have been managed. Let's look at the structure of the approved costs. So as you see here, the business of electricity supply basically has three sub-activities. One is generation, as you see here. The other one is transmission. The other one is distribution. And when you run into short-term debts, in other words, overdrafts, because the cost and the price are not matching, there has to be servicing of short-term debts. Generation has a capacity component and a fuel or renewable energy component. Basically, the capacity component is fixed, largely depends on the investments on generation as well as contracts signed with private power producers. They are fixed component. Whereas depending on the customer demand, the renewable energy input by way of hydros, worldwide oil and coal prices, the fuel cost per kilowatt hour produced will vary. So as you see, 2014 it was 1029, 2015 1053, 2016 was a good hydrological year. It went down to 862, and now since then it has been climbing substantially. Possibly by last year this would have gone up to about 18 rupees. Transmission costs have been relatively stable. As you see, there is a small increase here which I am not able to explain, but relatively stable. And now you know, out of a kilowatt hour you cost to be 2159, there's a fixed cost in generation of 312. There's a variable cost in generation of 1392. These are 2019 figures, but the structure is the same even today. To bring that energy from the power plants to your local substation, it's 83 cents. And to distribute it from your local substation across distribution lines, medium voltage, low voltage lines, across the streets, under the road in Colombo, and to answer your service calls, I have no electricity, can you come and have a look? So all those costs are embedded in the distribution costs. So the structure is very well established so that monitoring is possible either on a per kilowatt hour basis or on the basis of the total cost. So you can visualize the cost structure. Now what we see in this cost structure is that Sri Lanka's generation costs compared with the international costs, this is 2019. This would have been, this is 139. This is about almost 10 US cents at that time. So 10 US cent of energy cost is internationally on the very high side. Whereas our fixed costs understandably are lower than the fixed costs of a, say for example, a European or an American utility. So let's move on. And the sector costs have increased. Here I'm giving you the total costs and basically showing you the structural change of costs that we have seen. So, so some of the costs have increased faster than the other costs. Say, for example, the fixed costs of 115 billion rupees recorded has recorded a 69% increase compared with 2014. Whereas the fixed cost of, let me see, on a per megawatt basis has gone up by 37%. Fuel and renewable energy costs have gone up by 86%. Whereas fuel and renewable energy cost on a per kilowatt hour basis has gone up by 35%. So it's not really the total what matters. What matters is the cost per kilowatt hour, mainly because we sell electricity on the basis of units or kilowatt hours of electricity purchased by a customer. That also has to change. I will come to that in a moment. So the costs have increased in this fashion over the window that I am presenting to you. And let's also briefly look at the energy costs of power plants. This is 2019 figures. These figures are very different today. Large hydro is considered to be at zero cost. CB is not paying any royalties or water charges to any authority to run the larger power plants. And similarly, the small hydropower plants are not paying anything significant by way of royalties for the use of water. So Sustainable Energy Authority law says renewable energy belongs to the Republic. So that means renewable energy belongs to the people. So the government says, I do not need any royalties. So the inference is that the benefit of that renewable energy or electricity produced from renewable energy will flow to the society at a zero resource cost. So of course, don't forget, hydroelectric power, a unit of electricity from hydro is not at zero cost. It has a fixed cost. It's only that the energy related component is zero. So these are the costs, as you see on the last column, the cost per kilowatt hour for energy. Fixed cost is not included here. Fixed cost is not included here. So you will see the renewables in that year have cost 19 rupees for a unit of electricity produced, and 24 for oil, and about 10 for coal. And in total, it was 1276, the variable cost of generation. Now, we have the fixed costs and we have the variable costs. Now, how do we convert these costs to a price structure? Of course, one simple way is to add up all these things and say a unit of electricity is 21 rupees. A unit of electricity is 21 rupees. But then we need to also realize that the customer has to be given certain signals through the price structure. For example, we have to tell the customer, if you use electricity at peak time, it will be more expensive. So that customers will be encouraged to cut down their electricity consumption at peak. We also need to tell the customers, if you draw all your power in a short interval of time, you are imposing a large demand on the network. So therefore, you need to flatten your load profile. Your consumption pattern, to the best of your ability, should be flat or smoothed out. So therefore, there is a demand charge in the electricity price structure. Then, of course, historically, governments have used, not only Sri Lanka, governments have used the electricity bill to provide subsidies to certain customer groups, to provide subsidies. Historically, in Sri Lanka, it has been assumed that low users are low-income users and high users are high-income users. So in a way, anecdotally, CEB and LECO, of course, also have to do the job of, say, Subsidy authority in identifying customers who use less and assume that they are low-income customers and provide electricity to them at a substantially subsidized price. So in my view, that should not happen, because subsidies have to be managed and targeted to people who are actually deserving. And similarly, surcharges also have to be targeted. So if a customer you think is very rich, and that's why he is using a lot of electricity, that rich customer has to be taxed by Inland Revenue Department, not by CEB or LECO. Anyway, there are historic realities that have prevailed for a long time. But coming to our subject, the aspect of, or rather how to convert the costs to prices, the professional way is to convert the costs of supply at each voltage level at different times of the day. So which means if you are a high voltage customer, then the downstream investments are not required to supply. So you are a large bulk customer. And for different times of the day, because the cost of production of electricity varies from moment to moment, and the cost structure will have a capacity cost, energy cost, ancillary service cost, and a fixed cost. So, of course, different countries interpret these requirements in different ways. And some countries have made the price structure very complicated. Sri Lanka also historically has made the price structure fairly complicated. But there are countries who have very simplified price structure, which can be understood by anybody. Say, for example, a country like Singapore does not identify a customer by the purpose of use. It does not identify a customer by the purpose of use. So at least one theory of electricity pricing is strictly adhered to by Singapore. Customer's purpose of use is not known to the electricity supplier. He's a retail customer, medium bulk customer, large bulk customer. Of course, there are many other pricing elements there. So as I said earlier, the cost of supply is blind to the income of the user, purpose of use, appliances used. There are adequate examples in other energy commodities. As we know, fuel pricing does not recognize the income level of the customer. LPG pricing, even in Sri Lanka, does not recognize the income level of the customer, whether he takes a lot of LPG or whether he uses it sparingly. But for electricity, historically, it seems that the regulators and even the electricity suppliers and certainly politicians think that the customer's purpose of use and the quantity of use have to be recognized in pricing electricity. So we'll move on. I have a few more slides. So there are capacity costs depending on the burden imposed by each customer on the grid. If the customer comes up on the peak, he's responsible for his entire capacity that he imposes on the grid at peak. If the customer uses electricity outside the peak hours, then he is responsible for only the demand that he imposes at peak on the grid. But energy costs, now once the capacity costs, which reflect actually the investment and the operation and maintenance costs are looked after, then the grid becomes a pathway to transfer energy. So energy will come from power plants to customers. And as we say in the future, energy will go from one customer to another customer. But all parties should have paid the capacity costs, or sometimes in the West, they are known as user costs. So energy costs are simply passed from one level of the system to another, considering the cost of generation at different times of the day and the adjustments required to account for network losses. So therefore, the customer at the tail end of the distribution network has to pay the full network losses to reach it. As you know, Sri Lanka's network losses, as reported in 2020, was almost 9.5% of the electricity produced. It has gone up slightly above 2019 figure. We hope it will come down again. It's not excessive, but it is substantial. So this is what I told you. So the black curve is the demand profile imposed by the customers on the system. So I've exaggerated the curve a little bit, but Sri Lanka's curve is similar in shape. So this red customer, let us say that this is a group of customers, which we may identify to be, let us say, the hotel group. So this group identified by the brown color curve, their peak is not exactly at the system peak. So therefore, in terms of the fixed cost, this brown group of customers have to pay a charge proportional to the demand that they impose on the system at peak. At peak. So this group should account for that amount of demand, whereas another group of customers or groups of customers will be responsible for this portion of the demand. So that's how we can gradually take this calculation to a calculation of demand costs and energy costs. Let's move on without going through all this detail. You will get this presentation after the session. So responsibility of the energy costs of the system is not difficult to calculate. And of course, with modern metering systems, they can even be calculated and informed to the customer even on every 5 minutes or every 10 minutes. Sri Lanka has followed a time of use pricing system, which divides the day into 3 intervals, calculates the cost of energy in these 3 intervals, and try to pass it on to the customers. The pricing on time of use metering is also not perfect, but we have a time of use pricing system for bulk customers. So what should be the correct prices? Now, this is a summary that I frequently give in similar presentations. 2019 figures disaggregated into different customer categories in the form of capacity cost and energy cost. But subsequently, for convenience of understanding, I've represented them on a per kilowatt hour basis. So medium voltage bulk customers, that big industry in Portland or some ceramic factory or tire manufacturer, in 2019, he should have been charged 1785. And down the line, as we go through the distribution network and we go towards the customers who use electricity heavily at peak, the cost of producing and delivering a kilowatt hour to a household customer as of 2019 was 29 rupees. 29 rupees. Household group as one block. Of course, within this group, as we know, there are different categories of customers. So moving on. So pricing must have accurately calculated fixed and variable components. That's my view. So let's see what the fixed and variable components should have been. So once again, I apologize that my data is 2019, but the structure is the same and only the numbers have gone up by now. So the household group should have paid a monthly fixed charge per customer of 962 rupees. So if Sri Lanka wanted to declare a single tariff for households, it should have been 962 fixed per month. We could round it off to 950 or 1000 rupees and 1540 per kilowatt hour. So you can take your electricity bills and see how much you were asked to pay. Possibly you were asked to pay much less than this as fixed cost. And some of you were asked to pay a lot more than this as energy costs. All right. So it's a lot of data here, different categories of household customers, different categories of commercial customers. On the right-hand side is the actual tariff of 2019. So you will see the gaps. The fixed costs were all less than the required fixed cost. The energy costs for the initial three categories was less than what should have been charged, and the energy costs for others were as much as 2.5 times what they should have been paying for customers using more than 180 kilowatt hours of electricity per month. So these are all retail customers, as we call it, the people who get their electricity from the roadside distribution line. But if Sri Lanka wanted to say, forget about whether you are a house or a commercial facility, small industry, hotel, religious premises, simply pay 1,037 rupees fixed charge per month at 1550 for electricity. As of 2019, this category of customer has now fully paid their commitments to the electricity supplier. That did not happen, but I will give you the bulk customer figures as well. Large customers, these are large but medium-sized customers. That garment factory, that hotel down the road, who are a bulk customer, they should have been paying 1,440 rupees per kVA per month as fixed charges or other demand charges, and 1420 for energy. You will remember that our retail customers should pay 1550. Why? Retail customers are on the distribution network. Low voltage bulk customers, they also have a distribution system, but below the meter. So therefore, the network losses to get electricity to them is not as significant as the network losses to reach the tail end customers. And you go upwards in the network, then the medium voltage bulk customers are even cheaper to supply, 13 rupees and 73 cents. So if Sri Lanka wanted a very simplified 3-line electricity price structure, if we implemented this, we would have collected enough money to say CEB is breaking even as of 2019. So that did not happen. One more point before I move on to my last block of slides is that the fixed costs of our system, like in many other systems, are in the range of about 35%. In some of the advanced economies where the costs of material as well as staff and the maintenance are higher, this percentage might even go up to 50%. So this is the share of cost that is fixed. So even if a customer does not buy a single kilowatt hour in 2019, the sector cost, this includes LECO costs as well, the sector fixed cost would have been 117 billion rupees. Whereas the energy cost that year was 65% of the total cost. So why I'm highlighting this here is that there is a reason. I'll come to that in a moment. Before I talk about that, it's very clear that the electricity prices will have to increase. Even as of 2019, they had to increase. But then is there a space to increase electricity prices? How are we in comparison with other countries in the region? Also, are customers, are they really asking for subsidies? Have we done the analysis? Have we done the surveys to ask the customers about their willingness to pay? Surely we have not done. But this is a little bit of data that I get my researchers to compile every year. So a medium household customer, if he was in Sri Lanka in 2021, this is last year, this price information is last year, he would have paid about 5 rupees per kilowatt hour. Sorry, 5 US cents per kilowatt hour, because this is an international comparison. He would have paid 5 US cents per kilowatt hour. If he lived in Philippines, he would have paid more than 15. Lived in Vietnam, about 50% more than in Sri Lanka. Of course, there are countries who are charging even less. Bhutan is a 100% hydroelectric country, and India, Tamil Nadu gives very favorable pricing for low users. So therefore, their prices were lower. And look at the commercial customers in Sri Lanka. They are surcharged in the electricity price structure. So they are paying almost the price of electricity paid by a customer. Yes. Hello. Hello. Lakshman, is there any problem?
Now you can continue. There was some disturbance, so now it's okay.
Okay, I'll finish in 5 minutes. So a Sri Lankan commercial sector customer, that office, that supermarket, was paying as of 2019 around the same price that a customer in Singapore would have paid for his electricity, and Hong Kong as well, as you see from here. So of course, manufacturing industry is, we know very well, it is subsidized in Sri Lanka. This is a small, or rather a medium manufacturing industry. The larger industries are even better off with regard to electricity pricing. And as you see, Sri Lanka is on the lower end of the scale with regard to pricing of electricity for industries as of end of last year, only 3 months ago. Another feature that I would like to highlight before I come to my last couple of slides is that what this shows is the snapshot in 2014, June of 2014, similar snapshot in 2017, similar snapshot in 2020, where I tracked the share of household customers in each of the consumption blocks. As you know, 1 to 30 is severely subsidized. 31 to 60 is also subsidized. In fact, right up to 180 is subsidized. But you will see the orange bar is going down in percentage terms. So customers who were 20% of the total customer block using less than 30 kilowatt hour, and now the number has come down to about 16% as of 2020. I did not track 21 and 22 because these were unusual situations. So as you see, the gray block also has come down, and the mustard color block is about the same. But basically what it says is that customers are moving away from the subsidized blocks. That's a basic message. They are moving away from the subsidized blocks to more expensive blocks. At least the data indicates that the customers have a higher willingness to pay. We need to verify this with a survey, and the decision makers, the PUC and the shadow decision makers behind them should realize this fact. The customers are willing to pay for a better service, and that is confirmed by the data. So similarly, the share of household electricity customers who are using less than 180 kilowatt hours per month are about 90% of the household group. So just by increasing the electricity price for high users, we are not going to resolve the problem of subsidies. That's what this says. Also, very surprisingly, 6.7% of households in this country are closed. I'm sure you are also surprised by that. I was also surprised, and we checked and double checked. These are actual customers with a zero meter reading, but they pay the monthly fixed charge. So which means it is an active account. Somebody pays the bill, but the house is closed. 6.7% of all households in this country. Now, coming towards the end, I said the grid of the future, as we know very well, is gradually becoming a service provider. Becoming a service provider. It's providing a service of absorbing your electricity or delivering your electricity. It will provide the service for you to sell your electricity through the grid to another customer. It's still not legal in Sri Lanka. Whatever you sell, you have to sell to CEB, but the time that it will change is not too far. And you're already doing it with solar PV and other distributed forms of generation, because the points of electricity production is changing and they are all over. The customers may generate as they presently do and trade energy on the grid. Presently, there is no trading, only selling. So therefore, the grid provides the infrastructure and the technical stability with its own generators. So that's why I say that the fixed costs and the variable costs have to be very clearly identified. Or in summary, if you want a grid connection, you need to pay the fixed costs for that grid connection on a monthly basis. Whether you purchase electricity from the grid or link your solar PV system to the grid is a detail. You can send the electricity to the grid, take it back, or sell the balance to the grid, or take it back when it is cheaper and charge your battery. Nobody is going to stop you. So we need to initially make the price equal to cost, as well as we need to get the fixed and the variable cost structured in such a way that we facilitate the future development of the grid. That's all. Thank you.
Thank you, Dr. Tilak. I think you have gone through in very, very minute detail, and I'm sure that this was a very, very rare occasion where many of our accountants were able to get a full maybe a view as to how the pricing structure is being done. And of course, the final answer is how we can make it a sustainable industry and of course affordable to the public. So I will not go to comment very much, but we have some of our experts. As I said, I think you mentioned about India, the pricing in different parts. So, but first, may I invite Mr. A.N. Raman, is a past president of the South Asian Federation of Accountants and also an expert in the cost and management accounting profession. Mr. Raman, you like to give a few comments or questions that you have?
Thanks, Lakshman. First of all, looking at the, I think last but one slide of Dr. Tilak Siyambalapitiya, I would like to appreciate that 6.7% of the Sri Lankan population, which has a zero consumption, but in a disciplined way, regularly pays that fixed charge, capacity charge to the CAB. Hats off to that 6.7% of the population. which has got a discipline of paying the CEB doctor, that is something which is remarkable. So I would first state that as an observation. And I would say that, as very rightly said by Professor Lakshman Vatawala, it has been an excellent presentation full of details by Dr. Tilak Siyambalapitiya, except that if we had at least 30 or 45 minutes more, some of the important structural issues we could have really digested. But one important clue I could understand, I kept on wondering in my mind, where is that deficit is going to be financed when government is also not giving, from the customers also it's not flowing. How is that the one single large company is sustaining? Somewhere in between, he also gave the clue that the cash flow is managed by not paying the fuel companies, and that is how an unsustainable solution is there in the whole grid. So he gave the clue there. But one important observation, what I wanted to give Dr. Tilak, is that so one important point where our Sri Lankan framework is going to play a very key role. Of course, you said in the beginning itself, it is only operational separation and not financial separation, of course, subject to that. Our cost accounting standards, which are going to be issued within the ambit of the framework issued by CMA Sri Lanka, it is going to work on application of standards in preparing the actual cost structure. Throughout the whole presentation, you have made that the companies, the entities coming under the generation, they will be all the distribution distribution companies. They will be presenting the forecast cost structure. So you yourself admitted somewhere that the actuals versus the forecast presented for cost allowability, that has not been made into a system anywhere. But what we have been now, we have been focusing now in the Sri Lankan cost accounting standards and management accounting standards board is that the entities in Sri Lanka should come to the habit and discipline of preparing that cost structure based on the accounting statements they are preparing at the close of a financial year. So to apply this concept in the scenario told by you, if there is one IPP which has submitted a cost forecast for one particular year, 2019, or 6 months of 2019, subsequent to that 6 months, they should present their actuals based on the cost accounting standards issued by Sri Lanka, that based on this standard, this is our actual cost. So we would like to now throw in this particular concept at the right time where you can guide us. At the right time, we should throw in this concept that the cost accounting standards should be applied as given by the CMA Institute in preparing the actual cost statements to be submitted vis-a-vis the forecast given to the public commission, which you had very rightly presented. So this is one key observation. Lastly, I would like to conclude by saying that in India, you have very nicely brought out the pricing difference, and when you compared in various countries, particularly in Tamil Nadu, from where I am hailing, there are political problems of targeting the vote banks, which are forming a part of the consuming segments also. Like for example, if one popular government in one state wants to capture the political vote bank of agricultural, of let us say below 5 acres of holding. So the government can very easily announce that all the electricity connections with land holdings of less than 5 acres of agricultural land holding is exempted from paying the bill itself. So they will get free power where the pricing is not there at all. It is zero cost, whereas that will cause a huge burden to the distribution company. This is one peculiar issue which is caused by the politics being thrown into the electricity framework, economic framework, and that can also cause huge cross subsidization. This is also something which we need to factor in when we understand holistically what is the true cost of supplying to the various consuming segments. This I didn't find in your presentation. It was more segmenting in the form of medium voltage, commercial, medium voltage residential, and high voltage commercial. That segmentation would not capture this sort of variation. So I limit my observations to this.
Fine. Thank you very much. Thank you for your comments. And of course, just one quick response only to one point about how the sector is managing with such a cash deficit. So as I said, the fuel supply is not paid, and the government is not paid for its installments of long-term debt and interest. And even independent power producers, their payments are getting delayed. So Mr. Raman, when you run a system like this, the first casualty is the economic efficiency of the institution itself, right? Because the economic inefficiency of the institution gets hidden in all these unclear transactions. It's not, I'm not saying that people are, siphoning off money, but then the measurement of institutional efficiency is lost. So therefore, to my knowledge, there are no KPIs. There are no KPIs monitored by anybody because the institution is firefighting all the time. So this situation has to change. Thank you very much. I think there are many other questions. Lakshman?
Yeah. Yes. Before that, can I just get one comment? Mr. Hinnaka, you would like to make any comment?
I just, sorry, Robin, give me one second. Yeah, Dr. Tilak, I have a very kind of general question. I think. You mentioned about the subsidy the government is supposed to pay as per the statute. So I would like to know how they really arrive at this amount payable, or is it based on the expert opinion, or depending on the availability of the cash at the treasury?
Oh, so no, it's relatively simple. So the regulator, the Public Utilities Commission, reviews the cost submissions. And let us say, for simplicity, let us say he agrees, the commission, through a commission decision after the calculations and maybe some discussions with the licensees, can you not reduce this, that, and the other, agrees that the sector operating and maintenance costs, inclusive of capital recovery, everything, all costs include for this year is, let us say, 300 billion rupees, 300 billion rupees. Now you have the forecast electricity sales income based on the present electricity pricing structure. Because last year's data is known, forecast is not that difficult because our sales are growing at around 7% for commercial sector, about 4% for industrial customers, and about 3% for household customers. This is the order of growth. So now you know your market, you calculate the expected income. Let us say the expected income is 250 billion rupees. So either the government should say, I will give you 50 billion rupees in 4 installments. Don't increase the prices because an election is coming up or whatever. You don't say that, but you say you make it known. Or the government should say, or the Public Utilities Commission should say, the government has not agreed to any subsidies to be provided. So therefore, I hereby authorize a price increase. As simple as that. But when determining the 300 billion to be the allowed revenue, the regulator should have considered all efficiency improvements in the organization. It's not that CEB and LECO or generators can submit anything and get it approved. So there should be KPIs, and KPIs should be met, and the network loss target should be met. So in fact, out of all KPIs, the only parameter that is actually considered by the regulator is the target for network losses. Whereas there are no other targets given for anything when he approves the allowed revenue as of now.
Thank you, Dr. Tilak. Before we take the questions, Mr. Gopal, you can maybe a short question if you have anything or comment.
Yeah, good evening. It was an excellent presentation by Dr. Tilak. And of course, I could see a parallel of the situation what we faced almost about 2 decades back. But the unbundling of the electricity process, that is the generation, distribution, transmission, to a major extent, it has also been implemented in India, and mainly from the user point, industrial user point of view, I could see that they were able to by the bidding process where they start bidding for electricity for the next day through the general power grid, that is a national grid that is available, they were able to minimize the cost. As against the electricity board cost of almost around 9 rupees, they were able to bring it down to almost about 5 to 6 rupees because of that board. And as Dr. Tilak rightly said, no, it was a clear play of the peak demand. And whenever there was a gap in demand, the industrial users were able to bid for that peak demand. And they were able to also negotiate with the independent power producers who were able to keep their bottom line reasonably good. That way, the reforms have started working in India for the past 10 years. It has been doing well, except in case of state-owned enterprises who are still facing the problem. It was an excellent presentation, and I really enjoyed the presentation, which highlighted some of the key issues. And as Mr. Raman has pointed out, it will be a good takeaway for the Sri Lanka CMA SB, where we can try to embed all those concepts into the concepts or framework what we are developing. Thank you.
Thank you, Mr. Gopal Krishnan. And of course, we enthusiastically study and monitor, or rather, I should not say monitor, but learn of what's happening in India in terms of market liberalization. I think the next day bidding has been going on for more than 10 years now and expanding. So giving more freedom for the markets to operate is something that Sri Lanka has still not been able to implement because of the ongoing capacity shortages that have been a big problem for the last probably 15 years or so. So, but then we also need to get there very fast to do justice to the customer, to allow the generators and customers, at least the large ones, to use the grid to trade electricity between them. Thank you.
We'll take a few questions. There is one here. What are the options to bring down the generation costs?
Options to bring the generation costs are largely given the very recent price trends. As we know, the renewable energy prices, as it has been proven by the first larger wind power plant that we have in Sri Lanka, its production cost, there are various calculations, but I would agree on a 10 rupee per kilowatt hour price is what it produces. And the solar PV, the recent bids have gone in for prices in the range of 14 rupees. So by way of energy contributors, these two renewable energy technologies have now come to the forefront to displace energy that we will be taking up from the fossil fuel based power plants at times when these renewable energy sources are available. So as you know, our wind pattern is heavily determined by the monsoons, and solar energy is available only during daytime. Of course, battery technology is also progressing. We could have a pump storage power plant, one or several. So they will add costs, but they will basically help to manage the renewable energy resource. So the options to bring down the generation costs are largely in the renewable pool, as long as there is enough capacity in other power plants, conventional power plants, without forgetting the fact that renewable energy is either seasonal or there are annual variations, and we should have adequate capacity to meet the challenge when renewable energy goes down.
There is a connected question with the renewable energy. There is a lot of try to go for renewable energy publicly, but Lakdanavi produces nearly more than 50% of energy. Can renewable energy replace this plant capacity, or will it end up like the fertilizer crisis?
I think the question is more focused on the renewable energy targets the government has announced, whether it is achievable or not. Unlike the fertilizer target, in my view, this is an engineering and economic target. So if, and all engineering problems have an engineering solution. All right, the issue is whether we are willing to do the needful to make that happen. Say, for example, if we are to meet 70% renewable energy target, most of the incremental renewable energy will have to come from solar and wind parks, which will be largely located in the north of the country. So we have to imagine several transmission lines that have to be drawn cross-country, largely from north to south and southwest, and to a lesser extent from the southeast of the country to the areas where population density is higher. So can we get the transmission lines done? Will people allow the lines to be built, or will there be court cases running for year after year after year? So it's not that we may or may not be able to reach that particular target, but whether we will be able to find the investments and also to get the infrastructure done, starting from land, transmission lines, and the storage technologies up and running by then to meet this target. So therefore, it's more of a logistics and infrastructure and investment matter, not forgetting that compared with a conventional power plant, a renewable energy power plant, if it is solar, it needs 5 times the capacity to give the same amount of energy. So as you know very well, a megawatt of solar, megawatt of conventional requires about 5 megawatt of solar on an energy to energy basis. So therefore, in terms of megawatt, that means the capacity or the size of the lines, the land area required, it's so much more. So we should be prepared to meet the challenge. So therefore, I would consider it to be somewhat different to the fertilizer target, because fertilizer target is something that probably the experts say should have been tried much slower. For renewable energy target also, one might say we are not ready to get into that kind of a heavy share of renewable energy. But you may know that in a good hydrological year, maybe last year, the data is still not out. Last year, I think we have already reached about 50% of energy share from renewables because it was a high hydrological year. Thank you.
Thank you. The next question, recent reports on pricing in the modern context in websites is based on long-range marginal cost. Could you explain briefly on the long-range marginal cost pricing?
Well, actually, the recent thinking in pricing is largely based on market pricing rather than long-run marginal costing. Long-run marginal costing was largely the principles that were established in the 1970s, 80s, and 90s when the utilities were centralized. Of course, we need to calculate the long-run marginal cost, for which there is a methodology, basically the incremental capacity and incremental energy, and how much does it cost to supply an incremental kilowatt and an incremental kilowatt hour from an existing grid in the margin. And the theory goes that your pricing should be equal to your marginal cost so that the customer knows exactly how much more the system will spend to deliver an extra kilowatt hour to you. So in principle, yes, it offers as a guideline, but the practice is largely to price electricity on the basis of costs, and the costs are on the basis of financial costs. Thank you.
There is a question on the recovery of costs. Whether now, supposing if PUCSL does not give a price increase, how can we recover this cost? And also PUCSL recovering annual income as a license fee annually from licenses.
Yes, this is a debatable situation because after all, everybody has to work according to the law. So I do not see any provision for CB or the government or PUC to provide once the costs are approved. Of course, there is a process to approve costs. It doesn't mean any cost, but it is efficient costs. So once the costs are approved through a process of filing and review and built-in efficiency parameters, then the law says the price should be equal to cost. So if any one of the institutions, of course it is the Public Utilities Commission, is not following the law, then there is no other way. If CB was a private entity, there would have been a court case against the Public Utilities Commission. So no court case is coming in because there is it's a government-owned institution. So, and as you would see in the law, the government actually has no say in electricity prices. The government cannot say the electricity has to be 20 rupees. Government cannot say. Government can say electricity has to be cost reflective, which it has done through approval of the act. But then it can say, look, the hotel industry is in difficulties. We hereby request you to give them a 6-month grace period to pay their bills. CB will quickly do a calculation. As in the same way, the government, as we know very well, asked the bankers to be lenient with regard to repayment of debts by these institutions who were distressed by the health crisis. So these bankers actually, as you may very well know, calculated their costs and sent their costs to the central bank. So similarly, CEB also should be doing the same. But if the PUC is not facilitating it, then CEB as a utility, in my view, should take appropriate action, which could even be legal action.
There is a question here. Is there any mechanism to monitor the wastage? That is the production versus distribution.
Yes, this is one of the parameters. This is one of the good stories that, as I always say, everything is not lost in Sri Lanka. At the turn of the century in year 2000, Sri Lanka reported 21% losses in the network, 21%. Last year, it was down to 9.45%. In fact, the previous year, it was 8.8%. That's the lowest we have reached in the history. So the loss of energy in the network is one of the parameters to which everybody who is managing both LECO and CB are sensitive to. So therefore, it is being monitored, it is being reported, and I believe there is some internal auditing going on and examination of the loss levels at regional levels. So that monitoring activity is going on, because if you produce electricity, you have to then pay for that production. And if you sell electricity, then you need to have money for that sale. So therefore, the difference between the energy sold and the energy input to the network is very well monitored. So therefore, we are now down to single-digit losses, whereas many other countries in the region are still struggling to come down below 20% in terms of network losses. So that's one of the good stories, and these things did not happen by accident. There were people who were although we can't get the government to determine the electricity price, it doesn't mean that we can neglect the network loss subject. So therefore, loss monitoring is going on very well, and collecting the revenue is going on very well. Sri Lanka collects 99.5% of invoices, so which is a very good figure in the region. Of course, recently there have been some trouble, as we know very well, because the government wanted CEB and LECO to give a grace period. So there are some difficulties there, but until year 2020, the repayment record, the bill payment record was very good. So there is monitoring going on. Everything is not lost in my view.
Thank you, Dr. Tilak. We have Ms. Parvati. She's a cost accountant and also a consultant in the electricity industry in India. Ms. Parvati, you have any comments or questions you like to pose?
Thank you, sir. It was an excellent presentation. Am I audible?
Yeah. We can hear.
Yeah, it was an excellent presentation and a very good insight into the Sri Lankan electricity sector. I would just like to add, the questions that have been asked, I think they were all also very much valid. And I only want to add that, and also see that given the fact that, this model is not a sustainable one, that we are all agreeing to it. So I would like to agree with Mr. Raman that a good cost management structure in place is very much essential to at least enhance the visibility. The control comes later on, but to enhance the visibility of where we are losing, and also the fact that the business model in electricity is also changing, that the future models, like now we see electric vehicles coming in India. The infrastructure is being developed for charging of these electric vehicles. This will be another one big segment, big consumer of electricity. So with such new business models coming in, the pricing models will for electricity will also the futuristic model will also be totally different, and this would obviously require a good cost management structure which to be put into place to enhance the visibility of the costs, and also to, of course, the efficiency part. I really appreciate that you're saying that there's single digit losses, which is really appreciable, because in India we have many regions where still the losses are in double digit. Also, power theft issues are quite phenomenal here. Uh, and also the collection ratio, which you're saying 99% is commendable. So enhancement of visibility, as you're saying, it is there as far as the efficiency in performance of technical performance of the electricity sector is there. Similarly, in the cost area also, the visibility needs to be there. For that, a good cost management framework will definitely help to better monitor and control the cost leakages, or maybe it may also definitely help the pricing in the futuristic models which are yet to come.
Thank you, Parvati.
Thank you.
Dr. Tilak, do you have any comments?
No, thank you very much for your comments. And when I look at the loss figure, now we look at the second decimal place in the loss figure as well. So we argue whether it should be 9.45 or 9.46 or 8.89 or 8.88. So it's to that level, our utilities and we who are outside the utilities are concerned and monitoring the losses of the network.
Ruchira, you have any comment? Yeah, Doctor, I have one question. Now you have different methods of production, production of electricity. And now there are also very old plants that are also generating the electricity. Now, have they done any costing? Because what I feel is that some of the older plants should be scrapped because their cost of production will be very high. And where we can maybe bring in the newer plants. Is there any sort of scheme by which they work out the individual cost of these different plants and then compare it?
Oh, sure. What is available in the public domain are the actual costs of operating all the power plants on a per kilowatt hour basis. It's available, the actual costs as of the previous year. So year 2020 data is available, but in the annual report, you see only a summary. Then in the long-term planning report, you get the operating costs of these power plants, and invariably there are, in any plan, there are a number of power plants identified for retirement. So now the sad thing in Sri Lanka is that when a power plant is identified for retirement and replacement, getting that replacement done on schedule gets delayed. It could be lack of finances or inability to go through the bidding process and take it to a conclusion. So all these, I would say, distractions to the procurement process finally results in CEB continuing to run power plants that should have been retired 5 to 10 years ago. So one good example are the gas turbines in Kalanithissa. The oldest one over there, when you look over the bridge to your left-hand side as you leave Colombo, is 40 years old. So no country will be running a 40-year-old gas turbine because their life, even on CEB books, is 20 years. So you can imagine the poor efficiency at which they will be running. And that replacement should have been done 20 years ago. Still not done.
You have any comments on the public-private partnership? Now, recently there have been a lot of talk on this US company coming in on the privatization. Do you think that this public-private partnership, either local or foreign, will really improve the efficiency of the CEB?
Well, it's not really for the utility as such, but it is to provide energy to the utility. So CEB's efficiency or inefficiency, whatever you may like to call it, will remain. So as you can imagine, well, of course, the law does not provide for CEB to be privatized, particularly the bulk supply function and the transmission function. It is written into the law, will remain under government ownership. But power distribution can be taken into semi-private arrangement like LECO. It's allowed. But what is allowed as 100% private ownership or public-private partnerships is in power generation. So as long as it comes on a competitive basis, because that is the rule that is written into the Electricity Act. The Electricity Act says electricity should be procured to the grid on a competitive basis. So as long as it comes on a competitive basis, there is no issue as to whether it's totally private or private-public partnership or public but a subsidiary of CEB or whatever. There is no restriction. There is one restriction in the law, that if it is a totally private entity, it requires a share to be given to the government. That's a clause in the law. But technically, there can be even 100% private ownership of power generation, which we see many around even now. So I have nothing for or against, but then of course there are matters related to the contractual arrangements, because unless the power purchase agreements or gas purchase agreements in the case that you have been referring to they consider the limitations of the system and the requirements of the system, there could be difficulties as we go along into the future. And the same will be there with renewables as well, because all renewable power plants that are now operating are on a must-take basis. So which means even when CEB doesn't want it, if CEB reservoirs are spilling, still electricity from those renewable power plants have to be purchased. But in the future, definitely there will be curtailments when too much of solar energy is there. Either they have to put it into a battery and send it in the night, or be subjected to curtailment. So if these requirements are looked into, plus the price, then there is no issue whether it is government-owned or private or partnerships.
Thank you, Dr. Tilak. Yeah, your final comments, now today there is a lot of maybe problems about this power, maybe about the supply, about the fuel and various other things. Today, the exchange rate has gone up to 160, which means power prices may have to be revised. What is your final maybe words on how we could take forward this sector and also overcome some of all the problems that we are facing now?
In terms of pricing, as we do for everything else, customers should be required to pay what it costs. If the customers start getting the bills at what it costs, energy conservation will be done automatically. So we have seen it before. There have been instances where electricity prices have gone up by 35%. The next year, the demand growth is very low. But of course, later on, it will catch up. But then once the price reflects the cost, then gives a message to the customer as to how much he can save when he saves a kilowatt hour, and how much the country can save when he saves a kilowatt hour. So, but of course, as you say right now, given the crisis, there was an order to switch off street lights, but even yesterday, all the street lights were on, right? And all the lights are on in most places, except for in my house, maybe, right? So therefore, people are not sensitive to statements, but people are sensitive to price. And also the other regulatory actions that have to go with it to bring in energy efficient appliances, labeling of appliances. We have a lot more to do in that area. But on power generation, definitely it has to be a mix of conventional and renewables, with the benefit of renewables coming in and the potential for renewables we have. We need to accelerate the renewable, particularly the renewable projects that have been stagnating for a very long time. Not forgetting that you need larger power plants to bind these renewables and keep them going together, because renewables require a solid power system for them to work on when the resource changes, such as sun going up and down, wind velocity going up and down. The system should be held together by larger power plants. But then the fuel consumption of those power plants will definitely be reduced when we have renewables coming in. So that's a strategy that, in my view, we should follow.
Thank you very much, Dr. Tilak. So I will now invite our Vice President and President of SAFA, Mr. Hennaka Bandara, to deliver the vote of thanks.
Thank you, Professor. Valued speaker, Dr. Tilak Siyambalapitiya, and panelists, ladies and gentlemen. On behalf of CMA, I am glad to propose this vote of thanks after a very successful webinar, the discussion conducted by Dr. Siyambalapitiya, an expert and well-known energy consultant, as well as a well-known lecturer. Dr. Tilak mentioned that non-compliance with the legal provisions by both CEB as well as Public Utility Commission has caused the electricity industry to be financially unsustainable since about 2016. And we have been hearing this story last so many years, even though there are no solutions from the authorities. He also mentioned that the importance of improving efficiency of utilization of funds and the usage of staff, importance of claiming subsidies from general treasury, how LECO is making profit and why CB is making losses. He also highlighted the manner in which the accounting is done by CB. I think it's very important for us to know the shortcomings of all these areas. So this is the area where we can provide expertise. And right now, I think our president is having so much discussion with the authorities to see how we could really assist them to improve the efficiencies and to avoid certain shortcomings. With that note, I would like to thank Dr. Siyambalapitiya for your insightful presentation and sharing your knowledge and experience to educate the participants on a timely important topic which has an impact on our day-to-day life, and for taking time off from your work schedule to be a main speaker at this very, very important webinar. Our panelists, Mr. Gopal Krishnan and Mr. Raman, have joined from India. So they have been supporting us almost in our every webinars, various subjects matters. Let me thank two of them and all others for their valuable comments and sharing their experiences among all of us. I'm sure that the technical matters highlighted by Dr. Siyambalapitiya and the panelists will assist all our participants to aware of as to why and how all stakeholders are facing all these burning issues and why the authorities have failed to address major shortcomings highlighted by Dr. Siyambalapitiya. I would say that it's black and white the presentation, anyone will be able to understand, and there's no reason as to why the authorities are not taking any effective measures to address all these issues. Let me also thank our President, Professor Lakshmana Vatawala, for organizing this seminar under the CPD program on a timely, relevant topic to enhance the knowledge of our members as well as other interested parties. Finally, I would like to thank all our council members, members of the Institute, our friends from India and others for your participation and sending questions. Let me also thank the CMA team for the support extended to conduct this important event. Thank you. Take care. Stay safe. Good night to all of you.
Thank you. Thank you very much, Mr. Hennaka. Dr. Tilak, I must thank you once again. And I think this is, I think it's a beginning, because what you said is going to be very, very useful to us, that we have this cost and management accounting standards board. And one area we are looking at is, of course, the electricity pricing. So I hope we can invite you for one of our meetings and you can brief us, because today it was a very, very excellent presentation, and that we'll be able to get your support to assist us in this respect. So thank you very much, and we wish you all the very best.
All right, thank you very much. And I will be sending the presentation to you. That will have my email address as well. And your questions are welcome even after the session. Sorry, I could not answer all your questions in all the detail, but I'll be happy to answer any of them after we finish this session. My email address will be there on the presentation itself.
Thank you, Doctor, and all the very best.
Thank you, Doctor.
Bye.
Thank you, Mr. Raman. And
Thank you, Doctor. Thank you.